Hi, this is Hyperwave. We have missed you guys. Here with Tyler. I'm Leah Wald hosting. I will look for your QA. This is going to be a fun one. I will definitely let Tyler explain, but because of you incredible people, the research group and everything that's going on, there's just so many hyperwaves. And so that brings up a greater conversation, which we are going to hopefully have in this vlog about what that means. How that's connected to the stock market, how we should be thinking about everything we're seeing. So, Ty?
Yeah, this is going to be fun because I have no idea what I'm going to say. Lee and I are going to sort of discuss the current context or the current state of hyperwave. And that has a lot of connotations for me. The first connotation is 6 months ago, nobody knew anything about hyperwave except myself and 2 or 3 people that helped me over the years work on various things. And now a lot of people at least have been exposed to it. And we've got a group of over 20 people that are working very diligently. I mean, hours and hours and hours every day, exploring new hyperwaves and categorizing them into groups according to what phases they're in. And we're not ready to make any of that public yet, but the main context that I see is one where after years and years, in fact, after decades of just kind of keeping it to myself and using it to make decisions, I'm in the enviable position of having people asking a lot of questions, making a lot of comments, a lot of very positive feedback, but also a lot of exploration. Some just on the behavioral side. We've got somebody on the team who is really interested in what causes technical analysis to be so effective sometimes. Not just hyperwave, but she is particularly interested in hyperwave because it's such a cookie cutter type of a thing that once you have been exposed to it, you can pick them out very quickly because they all look basically the same. And I'm not even going to bring up a hyperwave chart because I'm assuming that people that have been listening to Leah and I for some time now know exactly what the hyperwave is, at least what it looks like, and they know that there's 7 phases to it. And most of you know that the reason I'm talking about it is because of Bitcoin. I didn't really talk about it except to my clients when the U.S. stock market did what it did on 3 different occasions back in the 1990s and the 2000s, and then we're in another one right now with the NASDAQ and possibly with the S&P and the Dow. So all of a sudden, I've been saying for years, I used to say that I found over 125 of these over a 100-year period. And then I started saying, well, I've now got it up to about 200. And then about 15 years ago, I found a bunch of other ones by looking at some other markets. And so I started talking in terms of 275 or 300. But just in literally the last 2 or 3 weeks, the team that's working on this has come up with another 50 that are currently in various stages. And remember that phase 1 and a phase 2 isn't considered a hyperwave until it reaches phase 3. So basically, we're looking at phase 3s, phase 4s, phase 5s, 6s, and 7s, and have over 50 of them categorized right now. So the first context that I want to just talk about is how unusual it is for the analytical world to be presented with a new program or a new technical tool. You know, some of the more recent ones are still 20 years old plus, the Bollinger Bands, which was really an innovation in a way, but all the other ones, the sequential system is from the late 1970s. The Elliott wave is from the 1940s. The Gann angles and all of those sort of things are 1930s and 1940s. All of Edwards and McGee's stuff from the late 1940s. It's very intriguing to me how this thing has sailed under the radar for so long. And it's just an unusual position to be in, to be trying to answer questions from a lot of people that have never been exposed to it. If, you know, a lot of people have been using this for 10 or 20 years, they would be making other comments than the ones they're making, both positive and negative. So that's the second thing that's a little bit intriguing to me about this thing in context. Because I have studied technical tools for so long without being at all egotistical, maybe a little bit, but I believe that this particular tool is one of the most powerful ones that I have seen or used in technical analysis, mainly because the probabilities of things being right or wrong with a technical system are based on how many times you have to make a decision with it. And with hyperwaves, there's almost no decisions to be made once you know what they are and how they move from phase to phase. You just have to recognize them. And that's not an easy thing to do because they're so rare. I said that our team has found 50 of them. Well, we've got 20 people, you know, looking at them all over the world. We've got some people in Australia that are looking at it, some people in the UK that are looking at them, some up in Canada that are looking at Canadian markets. So we've got a lot of eyes looking through lots and lots of charts, but most people don't have the time to do that kind of stuff. Or the willingness to do it. And, you know, we're really, Leah and I are very blessed to have this remarkable group that has come together so quickly. And we had to really close the doors on it because the number of people were simply overwhelming our ability to use it. So that's the other contextual thing. Just from my point of view, I want to turn it over to Leah because she and I have talked about this for some time, but once you get into the day-to-day habit of vlogging and trying to keep track of what you've said and then move off into consensio and move off into macroeconomics and to broadening tops and away from the crypto market, we get so busy that we don't have time to just sit and talk and reflect. And that's really what I want to do today. Before I completely, you know, bewilder Leah, I'm going to ask her just her kind of view of this whole hyperwave thing. She has been exposed to it for a fairly short period of time also. And in our vlog, she was really hearing some of the details for the first time. So because she knows me so well and she's heard me babble on and on about various things having to do with hyperwave, I'd love her to act as one of you and just give me an overall sense of how she sees this thing fitting in, not just into Bitcoin and into the crypto market, but maybe in a bigger sense. And then I want to make some comments about implications of what our group is finding. and I haven't had time to really think about it because literally this has all come together in the last several days, where these guys and girls are posting hyperwaves that are showing up all over the world in technology, in biotech, some in energy, some in things I would never have imagined. And so my question to all of you and to my team and to Leah is going to be, what could be happening on a macro basis that would have these things springing up? Is it possible that they've always sprung up, as many as I'm seeing right now, or there just was never enough firepower to find them, since other analysts didn't know what to look for until now? So with all of that, I'm going to throw it over to Leah. Hopefully I've given her a little time to gather her thoughts. But Leah, what context would you put Hyperwave in from your perspective at this point?
Thanks, Ty. Also to note, Tyler said that we should do this vlog about 15 minutes ago. So this is a cool one. And it's actually funny you said that, because while you were speaking, I wrote down, which is why I have a pen, a question about economics and policy that I was going to actually ask you first. So I think our wavelength, hopefully we're becoming more telepathic together. The first thing that comes to mind, just given my background, and again, if anyone knows, I do not at all come from a TA background, technical analysis. Tyler has converted me, and then Tone has probably reinforced that one. But I always think about my background with behavioral economics. And you mentioned economics and rational markets, and kind of obsession, as you very well know, of just studying behavioral finance and game theory economics, and looking at that throughout history. Why, if, you know, the obvious example that everybody always uses is the tulip bubble, but bank runs, and throughout history, you know, why have these happened, as well as with technological advances, industrial revolution, when things in the world have shifted so drastically that it changed, you know, from the Middle Ages to, you know, literally changed history, changed the way that people think, from art to music to, and I am going to come back to this. I also think, just on this train of thought, because you did throw this at me, Gerda Lasher-Bach, and I think about Magister Ludi of Hermann Hesse, and just the importance and also the opportunities of tying together various disciplines. And why I say that is because exactly what you said. You started out by saying that one of our brilliant researchers in this group is interested in the behavioral side. And now we're finding hyperwaves in the most crazy industries. I mean, I can't wait for you to start telling people what, you know, it just all across the board. And so for me, what keeps coming up in my brain is, how is it that in such a variety of industries, thought processes, game theory, misbehavioral of markets based on animal spirits and people with herding mentalities, you know, how is it covering this full spectrum? So your question additionally was, has this always sprung up, or do I think this is potentially a new phenomenon? I think it probably has always sprung up. And I also just, you know, based on the hyperwave lines, and we do just say that, you know, it's a small percentage of hyperwaves that become funky hyperwaves. So, but that's looking at one specific potential asset class. But this, if we take it further, on our first vlogs, for anyone that goes back, they'll know that we often talked about how what a hyperwave means is that there is a major shift in the world. There's something huge happening that is making the world change as we know it. We, I think, believe that with Bitcoin and all the technological advances that are just, exponentially growing and insane, that it trickles down into asset classes, that it then moves into indices or whatever it may be. So with that, I'll turn it back to you. So what I was thinking while you were talking, and also on this current ramble, was that Tyler's also always taught me so many things. He has known me since I was, I think, say 15 years old. And from you've told me about the history of the Fed and what happened with the expansion of power and the gold standard, and what happened with BOJ, Bank of Japan and Kuroda and the Japanese markets, and what happened with their economy being in a hyperwave, which is what I'm going to bring it to, and just all different types of things, as well as your love of physics that we haven't talked about all that much. Tyler is absolutely brilliant when it comes to quantum mechanics and quantum physics. So just learning so many different things. You have this brilliant, as everybody knows by now, wealth of knowledge throughout industries. And you're able to spot all these different patterns. And on the show, often, right, we do talk about the technical indicators, the TA of it, and follow Bitcoin and everything. But at the same time, you talk about the fundamentals, and you talk about the policy and how econ policy and how all these different myriad of things that are happening in the world are also important in understanding these hyperwaves. So turning just back to the question that I had to you, was specifically what stood out, given my background is Japanese Asian equities, for anyone listening, trading. So if you could speak a little to what you taught me about the hyperwave of the Japanese economy. And in light of the fact that I'm in Washington, D.C., and Tyler's coming to visit, D.C. has a different vibe right now with Trump in office. Very, very different than I've experienced in my life here. And a lot of fear, a lot of uncertainty. So my question is regarding economics and policy made by central governments. Can you shed light on what are your thoughts of how that ties into what shows up in hyperwaves in specific asset classes, and also if that then connects to markets around the world, potentially this trade war with China? Will this affect theirs, or what do you think about all this?
Yeah, that's a great segue into what's been bugging me a little bit about the number of hyperwaves we're seeing showing up. And I'm going to talk about that in a little bit, because we are going to make them public. But I want to talk to the team about exactly how and when we want to do that. For someone just listening in for the first time, or have not listened to a lot of what we've talked about on about 80 different vlogs now over the last 3 months, I think all this sounds a little mystical and mysterious, but the name itself is kind of over the top. I agree with that, but it just was what I thought of calling it back in the 1970s when I first discovered it. And I think I think it makes a lot of sense, but if you've only heard it for the first time or a few times, the term hyper sounds over the top and an exaggeration or a hyperbole or something. But it really isn't when you study it wave theory, and I'm talking about in physics, basically, how things move in waves. And in water waves, there's a thing called a rogue wave, which no one really understands. It's simply a single wave. It's not a tsunami or a tidal wave. It's just overly large wave that sometimes gets to be over 100 feet tall and can flip boats over. And anybody that's seen some of these movies have heard people talk about rogue waves, but they're real things and they really occur in nature. And that's what a hyperwave is. It's just this single thing. It doesn't travel in waves. It's just one wave. It's just one gigantic thing that keeps building from a base and gets bigger and bigger and bigger until it goes all the way back down to where it started. And I'm not going to get into a lot of that. But your question, Leah's question, in terms of how does this fit into the real world and why and when, I've made the comment before that I believe that the fuel behind a hyperwave, a major hyperwave, I think there's major and secondary and tertiary waves, and I haven't really gone into that before. I'm not going to do it now, but a major hyperwave, I've always believed occurs when there are major shifts in the macroeconomic picture. The secondary waves are those things affected by the primary wave. So, for example, I've shown, I think, 30 or 40 different charts from the 1930s during the Great Depression and the period leading up to it. The period leading up to the Great Depression went from, if you want to think of the economics as being predictive of the stock market and the stock market being predictive of either recessions or depressions or some other order for those three things, from 1908 to 1922, the stock market as measured by the Dow Jones Industrial Average was stuck in a phase one of a hyperwave that had not yet built. And even if it was building, nobody would recognize it because nobody knew what a hyperwave was. But looking back historically, we can see it. 1908 to 1922, 14 years goes by, and we're in a phase one where the price of the Dow Jones Industrials Average cannot get above 100. The same thing was repeated from 1965 to 1982, where we went for a period of 17 years in a phase one where the price of the Dow Jones Industrials couldn't get above 10 times what it was in that previous period. 1908 to 1922, the peak was 100, and that was the phase one line. And then a half a century later, the same thing occurred again from 1965 to 1982, where the Dow Jones Industrials couldn't get above 1,000 for 17 years. And that was a phase one. And when it broke out, it started this thing that we're still in today with massive moves in the stock market, massive economic gains. And the benefits and the calamities that occur on both sides of a hyperwave spread out very quickly. What I mean by that is the hyperwave in the Dow Jones Industrial Average in the 19 teens and 20s and 30s took prices from 40 up to 10 times that, just about 400, up to 388. And it didn't really start until 1922. So that huge movement occurred just in about an 7 year period before we hit the top and then went to the Great Depression. But I've shown a lot of charts in our vlogs of individual stocks that were going through hyperwaves also during the same period. And that's a very important concept for everybody to understand. The primary wave had to do with stock valuations worldwide. The secondary hyperwaves were occurring in various industries in various stocks. And then there are tertiary things that occur outside of the major sectors in which individual companies are affected by this hyperwave. But none of that would have occurred if the major hyperwave hadn't occurred. Okay, so just sort of think about that. Japan went through its hyperwave that peaked in December of 1989 at 38,800 on the Nikkei after running all the way up from about 1,000. So it was just massive, and it took 15 or 20 years to complete on the upside, and now it's still working its way off the downside. So it's gone on for decades and decades and decades. And we're not going to go into the fundamentals, but Leah's question was, how does this all fit together with these big macroeconomic trends that I've talked about accompanying large hyperwaves? I believe the Bitcoin hyperwave is as significant as the credit hyperwave that occurred from during about an 80-year period that had to do with central banks, but also the beginning of deficit spending and also going off of the gold standard. So I'm not going to go into the fundamentals. I just want to point out that these major hyperwaves occur when there is a shift in the way the world thinks of things. And the world was so segmented over all the periods I'm talking about now, including in the 1970s and 80s when Japan got going. Segmented meaning cut off from each other with borders. Communication was nothing like it is now. There was no internet. There's no instantaneous flow of information through the medias. You know, you'd have to wait and pick up a newspaper in the morning to see what happened over someplace else. Whereas now, instantly as it's occurring, everybody knows about it, which I suspect is one reason the number we're seeing today across a wide spectrum of industries and sectors and a wide variety of countries has something to do with that phenomenon. But the question is, what is going on? What is the shift? And I keep pointing back to Bitcoin. And I keep pointing back to the fact that I suspect but don't know. My intuition is, but my knowledge is not, that this corner that we have painted ourselves into in the world with fiat currency, which has worked so wonderfully well for 200 years for the world, particularly when coupled with the gold standard to make it difficult to inflate that fiat currency, that's all come to an end. We pretend it hasn't, and everybody tiptoes around the topic. Everybody meaning regulators, central banks, and political groups that are in power tiptoe around the fact that it's over. It's over mathematically because of the size of the debt that has been run up against the ability to pay that debt off. And that's everything from Social Security and social programs around the world to unfunded liabilities and what's called off-balance sheet liabilities, and on and on and on and on. And it's over. So if it is over in terms of the problem has gone to the point where it can't continue, then the question is, what are the solutions? And there are a number and many more that have not been discussed because people are afraid to talk about it, because it's like whistling by the graveyard. You just want to ignore the problem and push it off, kick the can down the road for other governments, other presidents, other prime ministers to have to worry about. I believe that that's over, that things are unraveling way, way too quickly. And 07, 08, 09 was simply a warning shot about what that embodies, that happened to occur in one very tiny sector, tiny meaning the mortgage market, which is enormous, which is reflective of the real estate market, which is even more enormous. So I don't mean to diminish how widespread that problem was, but what I'm saying is that that's a tiny problem most of the time because it's under such control. I mean, governments and Ginnie Mae's and Fannie Mae's and working with banks that work with mortgage brokers, all of that's been in fairly decent balance unless we go into a very sharp recession or something. But this time around, it was the other way around. We didn't go into a recession and then the mortgage market fell apart. The mortgage market fell apart and then we went into a recession that almost became a depression. So the thing, the sector that was being screwy and unregulated and out of control is what caused it. And what caused that to happen? The central bank in the United States called the Federal Reserve. And that stage was set 5 years earlier under Alan Greenspan when he did what he believed he had to do, and I would agree with him to a certain extent, meaning that to get us out of the 2001, 2, 3 dot-com bubble and 9/11 and the big recession that followed it and the crash in the stock market, to get us out of that, Greenspan and the Fed rewrote the book, rewrote the law, rewrote the regulations under the guise of the welfare of the country, that we had entered an emergency situation where anything goes. And what went was forcing interest rates down to zero and then keeping them there too long. I think if the first part of that sentence had occurred, then maybe we wouldn't have gotten ourselves into what then occurred under Bernanke and Yellen years later in 07, 08, 09. In other words, if someone had known what the consequences were and could have whispered in the FOMC's ears and Greenspan's that, look, you have just done something remarkably dangerous. You don't have the authority to do what you did. You're making it up as you go, but thank you because it worked. But now let's let interest rates float again instead of being artificially restrained. And by not doing that, it caused another huge bubble, not the dot-com bubble, but the real estate bubble, which inevitably led to what I just described as the nonsense in the mortgage market, because everybody felt good and everybody was making lots of money, and therefore it got out of control. And it might not have if the Fed had stepped back a year and a half or 2 years earlier than they did. Which brings us back to Leah's question. I'm getting more and more concerned. To me, hyperwave isn't a question, it's an answer. For most people, if not all people, including those that are working with me on the research, it's a question. You know, is it a thing and how does it work and all of that? With me, because I've watched it for so long, I know it isn't. It's a thing, it's real, it's demonstrable, it's repeatable, it's got 7 phases, not 8 or 6, and only in very, very rare instances do you even have to think. All you've got to do is watch it and react to it and take advantage of it in both directions at the right time. So it's a very simple thing. It's not, but there's a few people that can make that comment with the authority or the confidence that I'm making it. I'm very happy. The context of Hyperwave today is very different than it was even 4 months ago, because there's a lot of people that are very interested in studying it, understanding it, learning it, and are doing so in a very quick fashion. Okay, why am I going off on all of that? I'm trying to answer Leah's question going back to Japan. Japan sort of came out of nowhere. I mean, remember after World War II, what was going on there? And then all of a sudden, they began hitting on all cylinders. And part of that, a very large part in my mind, was because of manipulation. Not the way we normally think of it, but manipulation on the part of the government, and more importantly, on the part of other corporations within Japan, wanting to support each other and supporting each other, buying each other's stocks with the nod and the wink of the government helping to support those, even ones that shouldn't be supported. So it over a 20-year period grew into this self-fulfilling thing that it couldn't fail. Everybody was going to make money. All corporations were profitable. The 10 largest banks in the world were all Japanese. Real estate in Tokyo alone at the peak was worth 3.5 times the value of all the corporations in the United States. It just got absurd because it was pushed up. Well, that's the definition of a hyperwave. But in this case, what it was is a country went through the 60s and 70s and 80s building and building and building into this economic powerhouse, and began passing the number 15, the number 14, the number 13, the number 12 countries, all the way up to number 2. And a lot of people in the United States thought they were, just as we do now with China, thinking they were going to soar right past the United States. They were buying up our real estate, our businesses, our corporations, our banks. So that's the perfect scenario for a hyperwave. Why? Because that had never occurred in Western, Eastern civilization, in terms of a country, a small country, coming from nowhere and all of a sudden dominating everything. So what would you expect if somebody told you that fictional story in a book about some unnamed country? You would expect that you would see not only the huge up move that we did, but it would get pushed like our mortgage market, like our stock markets have at various times, like our credit markets have at various times, to unreasonable levels. The same way Bitcoin got pushed in a very short period of time, 10 years or less, from nothing to something everyone was talking about, and everyone was putting money into it without understanding at all what it was all about, and therefore pushed prices much further than they should have gone in the period of time that they did, which is what's called a phase 3 and a phase 4 of a hyperwave. And then it becomes the same as all the other hyperwaves. It does what all the other ones do, and in my opinion, all the other ones will do in the future, until we can understand the behavioral side of what causes that. I'm giving you some descriptive examples of things that went on and why it occurred. Bitcoin being one, the Japanese market being another, the US market during the roaring 20s after breaking out of the doldrums, which started basically with all of the panics in the late 1800s. And then finally, we had a central bank in the form of the Federal Reserve put together to try to stop those fluctuations. Then we go into World War I. Then all of a sudden, we're out of World War I, and the Roaring '20s begin. The stock market breaks out in 1922, and we simply go nuts. Take it way too high, too short of a period of time. Everybody jumps on the bandwagon. You know, shoe shine boys and taxi cab drivers were putting all their money into the stock market and telling anybody who would listen, you've got to buy this, you got to buy that. You know, everyone was an expert because everybody was making money. Just like in the crypto market, everybody was an expert until the top came in because we pushed it too high. And now there are fewer and fewer experts, and meaning understanding what's going on, understanding that this is simply a repeatable phenomenon that keeps happening. So that's sort of my answer to Leah's observation, which is the important one, that one possibility that we are seeing so many of these popping up is because the macro picture has never been under this much stress, in my mind, from a historical perspective on a worldwide basis. Certainly, you know, it goes country to country, region to region at various times, but we're talking about a global phenomenon now, where there's just tremendous pressures on the economic system and on the solutions to the problems. And we've heard politicians and central banks go on for years and years and years and years saying the same thing, and the problem does not get any better. It gets worse and worse every week, every day, every month that goes on. And therefore, things are beginning to crack. If you think of a hyperwave as a crack in the foundation, I would go with that metaphor. I'm not sure I could describe it exactly, but when things aren't under pressure, there's no need for these wild cracks to develop. And the Bitcoin one is on my mind because I don't think it's over. I think we're going lower, as everybody knows, because Hyperwave tells me it's going lower. But I believe it will be followed by another one because there's no other solutions being offered. If somebody would start talking seriously about a gold standard, a return to a gold standard, or a return to a worldwide basket of currencies, something in other than behind closed doors with, you know, hushed whispers, but really started talking about policy changes, then I would be less sanguine about Bitcoin. But I don't see that. I don't hear it. No one can point to anything that's really developing, just more talk, more blather. And that means that markets are going to start cracking in various ways, both good and bad. Cracking, a hyperwave is simply the demonstration of a major shift, but it's broken into two parts: the good part, the first four waves, and the bad part, the last three waves. But you can't have one or the other. You've got to go through both sides of it, not just one side, both sides. So most of the things we're finding are still in the early stages of development, but a bunch of them are actually phase fours, late phase threes going into phase fours, which means the next step is a phase five, which is the end of all of those good times. And many of these charts we're looking at have been going through 1, 2, 3, and 4 for 20 years now. Some of them 15 years, some of them 12 years, but they've been building and building and building. I got nervous about the NASDAQ market. I said so back in February. Then it went to new highs. then it pulled back again. Now it's trying to get to new highs again, and the markets are looking pretty good the last 4 or 5 days. But my context for this discussion on Hyperwave is that there are things going on all over the world, with China down already 20%, a bunch of the Asian markets weakening very, very quickly. Real estate beginning to look a little nerve-wracking in London and in the UK. The UK market beginning to stall out a little bit. The US market struggling now for almost 6 months between January and today. Not struggling meaning falling down sharply, but having trouble getting traction and going while the economy is still very, very strong. So that's basically what I wanted to talk about today, is just an overall view. We are going to begin, Leah and I, in the vlogs as they come along, we are going to start unveiling other hyperwaves in various markets. And we'll probably just do it one at a time, so we have time to talk about it and look about it and think about it. We'll always end up with the Bitcoin analysis, except today, because running out of time here, we wanted to keep this pretty short. But just to give a lay of the land, that there are a bunch of people working very hard on the analytics, and we are going to make that as available as we can in the right form at the right time. Leah and I also are going to begin teaching classes on Hyperwave as well as Consensio and some of the other systems like the Selgin trading system, both just simply in terms of on Zoom or on Hangouts, but we'll just take small groups of people at a time. There will be a cost to you for that, but it will be very intensive, with small groups being able to interact and ask as many questions as they want. And also, we are getting closer and closer to actually traveling and going to various cities where there's a group of people that have become interested in learning some more of the details and looking at some more of the examples, and particularly a lot of the new ones that we're coming up with. So as this continues to develop, I just want to keep everybody up to speed on the context that we're looking at. We will keep bringing these vlogs to you as these markets, particularly the Bitcoin market, is struggling for direction. But I just wanted to broaden that out a little bit today to let everybody know that we're not ignoring the fact that there are some very important things happening. And with that, I'm going to turn it back to Leah.
Thanks, Ty. I have another question.
Yeah.
My question is about disrupting a hyperwave. So, where it's coming from, also starting with Japan, is from the most recent investor letter that I read coming from Third Point, which if anyone, so Third Point is a very famous activist investing hedge fund on Wall Street, very brilliant, led by Dan Loeb. Activist investing means that they very quickly come in, usually take a majority stake, change things up however they see fit, including management, etc. Recently, in their Q1 letter, they did discuss that they are worried about a recession. They don't know when it's coming, etc., but they are changing their strategies accordingly, especially with more short positions. Now, with Hyperwave, what I'm curious about is they bought most recently Nestle, but also United Technologies. We have shown an example of Otis Elevators, which is a subsidiary of United Technologies, having been in Hyperwave. Typically, which was the case, I believe, is that if a hedge fund especially is going to buy a large corporation like United Technologies, my guess here would be that it would potentially be in a phase 5, but absolutely a company that would be undervalued because they want to get it for a good price, obviously. Okay, so here's the question. If the assumption right now, hypothesis, is that the S&P and maybe the Dow are potentially in a hyperwave, and we have a very large established American corporation such as United Technologies with loads of brilliant, also well-established for over 100 years corporations underneath them, can a company like Third Point, who comes in, buys, and they're now spinning off and separating Otis Elevators and the other subsidiaries, therefore disrupt the hyperwave, and therefore it would not go into a phase 7 and not follow the broader index if they make such drastic potential changes within that company, you know, in economics, potentially even switching things from an inferior good to a normal good. But is that possible, and have you seen it? What do you think?
It's a little bit like saying, you know, can a guy on a surfboard who's riding an 8-foot wave and all of a sudden a rogue wave 40 feet tall comes by, can he do something about it? And my answer is no. Hyperwaves are the most powerful economic phenomenon that I've ever studied that show up in the form of a chart. And because of that, if something individual company is in a hyperwave and that company is no longer the same a day or a week or a month later than it was when the hyperwave was being created, for whatever reason, the company is bought out. Let's say you're in you started a phase 5 and someone buys it out. And forget the price, though. I'm not saying after it's already dropped and it's obviously cheap. I mean, at the beginning from 4 to 5, right at the peak, someone comes in and buys the company. A much bigger company buys that company. Will that change the hyperwave for that company? Absolutely, because it's no longer that company. It has been fundamentally changed. But that would be such a rare occurrence. And whoever did it was making a very big mistake because they paid way too much for it. Because if they hadn't touched it, they could have gotten a lot cheaper. If they had waited another year or 2 years or 3 years, because it was inevitable. Once you turn the corner from a phase 4 to a phase 5, you're going all the way back. You're going to erase 5 years, 10 years, 20 years worth of history in a very short period of time. So the knowledge, hyperwaves, once again, the context question is, it's not just a fun thing to look at. It's an enormously powerful tool for making a lot of money on the upside for years, but then also knowing when you have to get out with very specific rules. And then for some people, make an enormous amount of money on the downside. And now I'm not just talking about individual investors. I've told everyone in our research group, please, in your own accounts, any way you want to use this information, do it. And because as you study that and watch that and actually look at examples, real-time examples, you'll see what I mean. But just think of it from an institutional or a hedge fund point of view, or a central bank point of view, or, you know, any group that needs to analyze things. It's, I think, imperative for them to begin setting up and studying what is it about these things that are so repeatable and understandable and easy to find when you know what you're looking for. And then back to the behavioral question, what does it mean? you know, why are these things occurring? And why have they not changed the way they look and act for a century? I wish I would be around long enough to have an explanation of that, because I've tried to come up with it for 40 years. I talk in metaphors and similes and everything else because that's the only way I can explain how important these things are to myself, and then actually using them on a real-time basis over and over again over that 40-year period, and now having other sets of eyes that aren't, and intellects that are making their own judgments by looking at the facts themselves and often coming to the same conclusions that I have come to. And that's why I want it out there, and I want more and more people to begin analyzing and commenting and understanding it. So in your specific case, that's the way I would answer it, that you would have to fundamentally change that thing for it to fall out of a hyperwave. If you don't, if you just play around the edges, you're not going to be able to change it.
It's really interesting. Really, really interesting, especially you were saying buyout, especially when you look at reverse LBOs. So on that statement, to tie us back to Bitcoin before we end, you're saying that you're changing what that company is to a different company. That's absolutely true, especially if you do a reverse LBO or you're selling off its subsidiary units, etc., taking management seats. It is a different company. And it's very interesting. Therefore, with Bitcoin, would you see it going into a funky hyperwave, especially on the sooner end or the later end, when the nature of Bitcoin is potentially changed given new tech developments? If Lightning and SegWit, you know, and everything comes, adoption rate increases, whatever it may be, whatever Bitcoin may look like, do you think that that could potentially change its current course, potentially start a funky funky hyperwave sooner?
Yeah, that's a great question, and the answer is absolutely. Yeah, you know, this is not deterministic other than the shape of what this thing is in. But what's interesting is there was fundamental developments in every hyperwave year after year. The hyperwave from 1908 through 1937. Just think of what happened. There was world wars in between. There were presidential changes. There was the Roaring Twenties. There was getting off of the gold standard and making gold illegal for U.S. citizens and the confiscation of gold in 1933. There was the closing of banks. There was 25% unemployment. Each one of those things occurred at a different time as the hyperwave was going up and coming down. So which comes first, the chicken or the egg? I think they work hand in hand, that as the fundamentals and the technicals are shifting, you go from one phase to another to another. But once that ball is rolling down the hill, it's going to go all the way down the hill unless someone builds something big enough and strong enough to stop the momentum of the fall. And that can be done with an individual company, as I said, by simply changing the whole nature of that company overnight. You don't do that for an entire stock market unless there's fundamental shifts that take place, such as a new gold standard, or such as no gold standard, or such as the Federal Reserve being audited and finding out that there were things going on over the last 20 or 30 or 40 years that people suspected that they were taking too much power that was never granted them under the rules. And whatever it is, um, um, absolutely, it is not deterministic that when you turn the corner from 4 to 5, phase 4 to 5, you are going all the way back to 1 on a probability basis, which is 1,000 on Bitcoin. But I've been holding out for fundamental as well as technical reasons for phase 3 to have held, which it did not, and now for phase 2 to hold, which it might or might not. But the things that you're mentioning will determine that. You know, if all the other cryptocurrencies are finally swept away by SEC action, one way or the other, that's a fundamental shift. And that could very easily put a bottom on Bitcoin. If Lightning or any of those other things develop the way they could very quickly, that is a fundamental shift. It's taking a long time, but now I, unfortunately, going to have to run. We've gone over here, but I want to thank everybody for this discussion. And please send any comments or questions in to us, and we will try to answer all of them, and we'll turn them over to our research group as is warranted. And we will be coming out with more news about exactly how, when, and why we will be broadening out this whole concept of hyperwave. So thank you very much.
Awesome. Thank you, everybody, so much. Have a great day.